Good morning, ladies and gentlemen. My name is Alex, Senior Account Executive at GDMFX. This is today's European Session Outlook. We'll start with the North American markets, where we had the retail sales data month on month, 0.1% worse than expected, and ex-autos month on month again, 0.2% worse than expected, and the producer price index year on year, 0.4% worse than expected. Beige book signaled weak growth outlook. 2 of the 12 districts, Richmond and Chicago, reported that the pace of growth had slowed from mid-August until early October. One district, Kansas City, noted an overall slight decline in economic activity. The 9 remaining districts, if they described growth, reported it as modest or moderate. The strong dollar acted like a brake on U.S. economic activity, particularly in manufacturing, energy, and tourism. The report comes 2 weeks before the Fed meets to set interest rate policy. So overall dovish reports yesterday. The Dow Jones 10 points down, Nasdaq sideways, and Dixie down to 93.93 from 94.66. Good day for trading on the dollar. USD CAD 10 points down, USD Swiss franc 9 points down, and USD JPY again 9 points down. We have Tier 1 news today, CPI data year on year, and Tier 2 again CPI data but month on month, as well as the monthly budget statement and Philadelphia Fed manufacturing survey. In Europe, we had industrial production from the EuroZone month on month for August, negative 0.5%, which was as expected. The industrial production year on year was 0.9% worse than expected. And then we had in Switzerland the ZEV survey expectations for October, 8.6 points higher than previous. This industrial production data that we saw signals that slower growth in China and cooling activity in other developing economies are actually beginning to hurt the currency bloc. We don't have any news for today, so investors will be waiting for tomorrow's CPI and Trade Balance data, again from the EuroZone. Alright, in the UK, the main news is that the UK wage growth slowed in August. The FTSE 100 fell 1.2% to end at 6,269.61. The index slipped 0.5% on Tuesday as downbeat Chinese trade data weighed on commodity stocks after a losing session on Monday. Meanwhile, the pound recovered lost ground against the dollar following an update on the UK labor market and disappointing US data. Average earnings, including bonus, for August, ending August, were 0.1% worse than expected at 3%. The ILO unemployment rate is 0.1% better than expected at 5.4%. The climate count change is worse than expected at 4.6 thousand. The climate count rate was same as previous at 2.3%. And the average earnings excluding bonus were 0.2% worse than expected at 2.8%. The GBP USD had a huge move, 220 pips up finish. No news in the calendar for the UK all the way until next week. Alright, for the Asian and Pacific markets, in Japan we had the tertiary industry index month on month. It fell with 0.1 from previous 0.2, and this indicates the domestic service sector in Japan. China is planning to extend the yuan trading to keep the market open during the European Day as it pushes for the currency to be included in the International Monetary Fund's special drawing rights basket. Also, the Nikkei 225 was 300 points down yesterday, 227 up so far today. Tomorrow we'll be waiting for Kuroda's speech from Japan. Australian employers unexpectedly cut jobs in September, signaling record low interest rates are yet to put the economy on a sustainable footing and offset a slump in mining investment. We had the full-time employment from Australia negative 13.9 thousand, down from 11,000. The employment change is negative 5.1 thousand, down from 5,000 expected and from 18.1 thousand previous. Part-time employment is 8.9 thousand up from 7.1 thousand. And the unemployment rate is actually 6.2% as previous and better than the 6.3% expected. We have Tier 2 news yesterday as well. From New Zealand, the business PMI 55.4, up from 55.1, and Australian consumer inflation expectation 3.5% up from 3.2%. Tomorrow we wait for the New Zealand Consumer Price Index quarter on quarter and year on year. In commodities, gold futures surged more than $10 an ounce on Wednesday, reaching near 4-month highs as investors piled into the safe haven asset amid a rash of disappointing economic data around the globe. Prices held overnight gains in Asia on Thursday as investors looked ahead to U.S. data on consumer prices today. U.S. crude futures inched down on Wednesday as persistent concerns related to global oversupply and decelerated economic growth in China pushed prices to an 8-day low. Crude prices fell in Asia Thursday on reports of a major build in industry estimates of U.S. stockpiles. Thursday's government report could show that stockpiles rose by 2.8 million for the week ending on October 9th. U.S. natural gas futures rebounded from the previous session's losses on Wednesday. Today's report is expected to show a build of approximately 92 billion British thermal units for the week ending October, and that compares with a build of 95 billion British thermal units in the prior week. Canadian gas export proposals up against 1990s era cost battle. The situation that Canadian companies have now is very similar to the one we had in the 90s, where there was a supply overhang. And lastly, Iran is even more tempting for big oil after the price slump. The cost of production does not exceed $31 per barrel there. As I mentioned today, we'll be having the EIA natural gas storage change and crude oil stocks change. Alright, thank you everybody. That was all for today. I will see you next time. Goodbye.